Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, February 23rd, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES failed to reject prices below the previous week's low. You had the previous week's low right here, and what we were looking for yesterday was for some sort of rejection of those lows for perhaps a return back to the previous week's midpoint and perhaps get another move going to the upside. However, the NQ yesterday really held things down, and while the ES and the YM were able to bounce a bit, by the end of the day the ES gave up those gains and closed lower below the previous week's low. That's indicative of more downside price action, and we're already seeing that still. We've had a very clear short-term downtrend that's been in play, failed new highs, lower lows and lower highs throughout, lower midpoints throughout, and we're seeing more of the same here today. One thing to keep an eye on is the previous week's high price there. This previous week's high is very important, and a failure to hold that level really opens up a return perhaps back to the FOMC key level below 37.75 half, and maybe even all the way across the month's range, which takes us all the way back to the previous month's close and perhaps wipes out the gains for the current month. So right now we're seeing clear signs of weakness. We're seeing price continue to hold below the previous week's low price, which suggests more weakness up ahead. And until we see a strong rejection, we may see further downward price discovery. Any near-term bounce back above 38.60 could offer a short-term rally, but again, right now the market remains in a downward price discovery phase here until we see some sort of significant rejection on lows. If we take a look at the NQ, this one down already another 1.7% here today. A tremendous range in the previous session here. You can see based on the 10-day narrow range that had developed here, we've already gotten a significant expansion phase, which the previous day seeing a 230+% of average daily range. Anytime you see a major 200% of ADR day like this one over here, that suggests you're going to see increased volatility in price range over the coming week or 2 weeks. And we're already seeing again another big high range day here today. This is 190% of average range already, and we've yet to hit the RTH open. So again, further downward price discovery could be seen here as price comes back toward the lower FOMC key level from December 16th. That's 12,646. We've already taken the January 27th FOMC key level offered. We could be looking at more downward price discovery again. Right now we are seeing an impulse sell-off from the high and currently still seeing new lows ahead. And until we see a strong low, we're likely going to see further downward price discovery phase. Once we see a strong low, there could be a bounce back toward the midpoint of this range, and we get ourselves a new key range to work off of. But right now, very bearish here for the NQ, and until price can find that very strong low, we're likely going to see further downward price discovery. If we take a look at crude oil, this one has rallied into 63s here in pre-market trading here. You can see the highest price right now so far 63 on the day. A very strong day in the previous session, a huge day where price bounced out of the PIMA trigger zone here. That bullish PIMA trigger zone has been in place since November, when we saw the November turnaround. And we mentioned before, whenever we got over that 50 hump here, we were looking for a move towards 65s. Once we get to 65, there could be a move all the way back to 50, as that now becomes the new trading range over the next several months. So right now we're still looking at further strength overall, although right now a bit of a higher high failure. We're seeing an extreme reversal signal develop, and that could lead to a return back to the previous session's midpoint on a day time frame basis, which is 60.52. So right now seeing a little bit of weakness here, but the overall trend remains up with a shot at seeing 65 down the road. All right, let's take a look lastly at gold futures. With the strength, with the weakness in the NQ yesterday and some of the broader market, gold actually bounced. It still remains in a downtrending phase overall, but the area where it bounced here, the 1760s, has been an area of support that has been very strong. So if you go back here and you look at this 1760 here, very nice LVN and has been a key area of support. We rallied off that level to new highs, rallied off that level recently, and right now bouncing off that level. So again, by holding that 1760, we could see a bounce that takes us perhaps to 1880. But right now, again, overall, this market has been kind of downtrending and remains within a bearish Pima trigger zone. So while there could be a short-term bounce here, overall right now this market remains kind of in a medium-term pullback phase, or at least a sideways phase right now. Any breakthrough 1760 would be significant, but right now been holding that level for several months. So looking for perhaps a short-term reversal back to 1848 to 1850, and then perhaps as high as 1880. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.